Welcome back, investors, to Ticker Time News. I'm Adam, and I've got a new company that I want to talk about and bring to your attention. Fastenal, ticker symbol FAST, F-A-S-T. And their shares were cruising in the fast lane after the company posted minor earnings and revenue upside in Q1. See, Fastenal tends to post headline numbers that are in line or close to analyst estimates. And that's because they share their monthly revenue each and every month. So even slight beats on its top and bottom lines typically receives positive interactions from investors. Now, Fastenal is a mammoth supplier of fasteners and other related industrial and construction parts like nuts, bolts, screws, nails, etc., and is furthermore being applauded for its success in navigating intense inflationary pressures during the quarter, setting itself up for what looks like a solid fiscal year 22. Now, on the chart for Fastenal, you can see on this, they have a solid trend line. They've dipped below it two major times in the past few years. That was March 2020 and February of 2022. Typically, when it pulls back to its 200-day moving average, that's your time to buy. Fastenal's success in managing the tight supply and inflationary environment during the quarter is showcased in its 12% year-over-year growth in on-site signings and a 12% uptick in daily FMI technology signings, which is Fastenal's suite of tools to make sure parts are readily available. It's also encouraging to hear Fastenal note that even though supply chains remain constrained, conditions have stabilized, translating to more products on shelves to support customer needs and thus making business less chaotic. An easing of chaos in the business environment supported EPS growth of 27% year over year to 40 cents a share and revenue growth of 20% to $1.7 billion. Earnings growth was driven by operating margin expansion of 120 basis points year over year to 21%. Both figures were further helped by Fastenal's robust pricing power, which tamed inflation in Q1. A major factor in Fastenal's relative price stability stems from its on-site business model, through which the company has sales offices right on customers' properties. This carves out an economic moat, as customers with a Fastenal on-site location have quick and easy access to parts, making it less likely that the business would choose a different supplier. This level of convenience likely builds in significant leeway in Fastenal's ability to hike prices further. The main takeaway here is that Fastenal is demonstrating its ability to effectively manage an inflationary environment through a combination of excellent pricing power and its competitive edge, branching from its on-site locations. Heading into Fastenal's earnings report, the industrial and construction markets were starting to show signs of weakness and maybe a few cracks in its foundation. February construction spending was up just 0.5%, and commercial window installer Apogee Enterprises, ticker symbol APOG, noted that it expects non-residential construction to remain flat year over year in fiscal year 23. However, Fastenal's upbeat Q1 numbers indicate that the U.S. industrial and construction landscape is pretty healthy, boding well for companies within these industries heading into the earnings season, barring any additional global supply chain hiccups, of course. Are you investing in this part of the market? Let me know in the comments below, as your comments help us all to better understand. Help support our work by clicking the first link in the description, smashing that like button, and sharing this video wherever you can. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.